broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, and thank you for joining us on such a warm and sunny day. For those of you who have not listened to one of our webinars in the past, my name is Darren O'Connor, and I am Head of Academies here at James Cooper Creston. I am joined today by one of our managers, Lauren Hyatt, who is also a specialist within our Academies team. So in terms of what we'll be covering off today, first of all, we'll start with the new Academies Financial Handbook. We'll move on to the Accounts Direction and finish off with other sector-specific developments and topical matters. Before we start, I thought it would be useful to find out your opinions in terms of the Financial Handbook and whether you feel the changes have been significant. So there should be a poll coming up on your screen now. Do you feel the changes are significant in the Accounts Direction, the Financial Handbook? Please answer yes, no, don't know, or haven't read it. So the answers are coming in as we speak. It's pretty much 50-50. Pleased to see that no one's admitting they haven't read it. But 50-50, broadly speaking, coming in terms of people who feel that the changes are significant and those that don't know. So let's go through it today, and hopefully you'll have a more informed position by the end. So the Academies Financial Handbook 2018. This is the main reference tool used by academies to ensure sound financial management. It sets out the financial framework that academies must work to. It was published in June 2018 and is 56 pages long. So in the scheme of things, a fairly concise document by ESFA standards. It's for various different readers, but we've listed out the main individuals there who may find or would find it useful to read, be it members, officers, governors, auditors, etc. It's also relevant to multi-academy trusts, but also just as relevant to single academy schools. It's important to note that it's effective from the 1st of September 2018. So in terms of where you currently stand, you are still working under the previous version, the 2017 version. And in terms of the audit work that you'll be gearing up for later in the year, that will be under the 2017 version. But it's still very important to plan for the future and to be aware of what is effective from the 1st of September, as you may need to change your processes and procedures. So the handbook starts with an introduction from Lord Agnew. He touches on many of the themes, some common themes that we've heard during the past, and is a constant feed and message from the ESFA. These include financial management is clearly very important, financial stewardship and value for money should be at the core of everything an academy does. We've listed out these sections, very similar to last year, and I won't go through them line by line, but some of the most important parts from my point of view sit in the in Annex C and Annex D. In terms of in C, it's the musts, and also in Annex B, in terms of the freedom and delegations and how academies should be set up. It's clearly something, as I've said, that all people involved in academies should be aware of. So moving on to some of the key changes, firstly from a financial control perspective, related party transactions. Well, I doubt we've done a webinar where we haven't talked about related parties transactions. It remains a hot topic. The key change this time is some transactions going forward will need prior approval from the ESFA. Any contract over 20,000 or a number of or series of contracts with one individual throughout a year that exceeds 20,000 would also fall within the same remit. So prior approval is needed. There's going to be an online form, and we believe that this is effective from April 19. So you have a little while to get your processes in place. But I think you will all need to update your financial procedures manual and ensure that, as I say, procedures and processes and controls are in place to ensure that this is adhered to. Set an executive pay. The financial handbook has strengthened its expectations for remuneration to be transparent, proportional, justifiable. This really builds on a letter early on in the year from Lord Agnew, which set out that pay should be linked to performance, and that there's an expectation that CEO remuneration should not increase faster than teaching staff remuneration. Gender pay gap is clearly something that's very topical and is in the media at the moment, and isn't something that schools should be monitoring and measuring going forward. Now, more from a governance perspective, the financial handbook reinforces the point that boards are responsible for effective oversight and robust challenge. The trustee's role has remained unchanged, but clearly the highest standards of governance still apply here. The financial handbook states that the board should meet at least 3 times a year, but there is an extra line added this year. If the board meets fewer or less than 6 times a year, then within the governance statement of their financial statements, they should be documenting and explaining how effective oversight occurs with only 3 meetings or fewer than 6 meetings. This is a key change, and it is something that will need to be incorporated in your accounts going forward, albeit this will only be relevant to accounts for the period ending 2019. There's also a new section added that academies must manage cash robustly, and if they're concerned about their cash levels, they should be reporting this to the ESFA. Moving on to management accounting, the financial handbook now states the management accounts should be prepared monthly. Previously, some academies, or even currently some academies, are preparing management accounts quarterly. Going forward, I think this will be monthly. It also goes further and states that management accounts should be shared with the chair at least 6 times a year, which fits in with the move towards 6, or the suggested move towards 6 board meetings a year. The management account should also be shared. Sorry, just stepping a step back there. The management account should be shared with the chair monthly. A correction there, and with the rest of the board six times a year. Hence, in line with the change in the board frequency. The management account should include a comparison to budgets and should explain any variances, and should also include cash flow summaries and forecasts going forward to show how the Academy will manage cash and debtors and creditors and the like. Another change is that the management account should now include key performance indicators, KPIs. My advice in this area would be to keep the number of KPIs down to a minimum, perhaps 3 or 4, maybe slightly more for a larger mat. But what we wouldn't recommend is you end up with 10 to 20 KPIs when you could end up spending most of your time measuring it and not actually gaining very much from it. So in terms of where you could pick up these KPIs from, well, the ESFA have released 10 planning checks for governors, which includes a list of key KPIs, and we'll give you a link to that document later on within these slides. You can also look at our benchmarking report that we publish each year, and hopefully you all have a copy of. If you don't, please get in touch, and we'd happily direct you towards the latest version. Moving on to financial returns. The ESFA have previously noted that they will name and shame persistent late filers. They've now gone a step further and have stated that if returns are filed that are of insufficient quality or of late, the ESFA may now carry out their own investigation. It's also gone a step further to say that the cost of the investigation will be borne, or may be borne, by the trust. Clearly, with school budgets being so tight, this is something you would and should try to avoid. Picking up on the Dear Accounting Officer letters, this is mentioned within the Financial Handbook. A reminder that the accounting officer letters should be disclosed and should be discussed with the board at regular meetings. And it also reminds that all previous versions of the accounting officer letters can be found on the ESFA website. So in summary, I think from our point of view, this year's version of the Financial Handbook clarifies rather than substantially changes in most areas. Some of the changes around areas that have had quite a lot of media attention in the past year, so it seems obvious that the ESFA would tighten up in those areas. A reminder of the individuals that we feel the Financial Handbook would be relevant to, and also a reminder that this is effective from the 1st of September onwards, 2018. And I think it's crucial that, that all the individuals listed above, at the very least, have a look at the musts within Annex C of this report, which I think is clearly important for all stakeholders. Okay, well that's it from me for now, so I'll now pass over to Lauren and she'll talk you through the accounts direction.
So before we start on the accounts direction, it'd be good if we just do another poll. So it should be popping up on your screens now, just whether you think the changes within the accounts direction this time are significant. So again, same options: yes, no, don't know, or haven't read it. So we'll just wait for everyone to submit that. So they are coming in, they're quite mixed, sort of 50% saying no, and then sort of split between yes and don't know. Again, no one says they haven't read it, so that's good.
Good.
So we will go through the key changes over the next few slides. So the accounts direction 2017-2018, it covers the period ending 31st of August 2018. So it will be for this next set of accounts that need to be prepared. It covers the details required for preparing the financial statements, which are a mixture of the Companies Act, accounting standards, which are FRS 102, the Charities Act, Charity SORP, as well as sort of specific ESFA requirements and funding agreement requirements. And again, as last year, there are fewer changes this year, and not all of them will apply to all Academy trusts. So the changes, so it's not so much a change, the first one, it's more of a clarification. It clarifies that all academies with a funding agreement must submit accounts to the ESFA for the year ending 31st of August 18 by 31st of December 2018. So there's a 4-month period after the accounting reference date. And it does also clarify that Academy trusts that become inactive, which would be when the final Academy transfers out, the 4-month rule does still apply. So if it were to transfer out on the 31st of December, accounts would need to be submitted with the ESFA by the 30th of April. So changes then to the trustees report. This is first on trade union facility time. This is a new section that is required in the trustees report, but only if the Academy has more than 49 full-time equivalent employees and throughout any 7-month period. So it won't apply to smaller trusts. Page 20 of the accounts direction within the Coketown model does give guidance on exactly what does need to be included, but it mostly consists of 4 tables which cover the number of employees who were relevant union officials during the period, and that is required to be on a headcount basis and a full-time equivalent basis. Number of employees and their time and their percentage of time spent on facility time, percentage of the pay bill spent on facility time, and the final one is details of the paid trade union activities. So as I say, that is all detailed on page 20, and the Accounts Direction does direct you to further guidance on this as well. So the next change then is the financial review. Again, this isn't so much a change, it just clarifies exactly what does need to be included, and it picks out some of the key points. It needs to show the in-year surplus or deficit, clearly stating the actual reserves position, so that will be your restricted general and unrestricted reserves, excluding any pension reserves, financial effects of significant events, and also principal sources of funding and how the expenditure has supported the key objectives of the Academy Trust. So again, that's detailed quite well on page 22, the Coketown model. And the last change, or last key change in the trustees report, is fundraising. So again, this is another new section that needs to be included to ensure compliance with the Charities Act 2016. So this is all laid out on page 24. Some of the key areas that need to be covered are the Academy's approach to fundraising, the details of work with any commercial participators or professional fundraisers, details of the monitoring of fundraising carried out on its behalf, and any fundraising complaints. It does have a reference there to some Charity Commission publications, again for further guidance. So the last change in sort of the first half of the accounts before we get onto the notes is the audit report. This is not a significant change, but there has been changes in the international standards on auditing. Therefore, the report this year will be slightly longer, but nothing to be concerned about. Just have a slightly different format. So we move on then to notes to the accounts. The first point there, the expenditure on raising funds. Again, this is quite a minor point. In previous years, it's just been shown on one line within the expenditure note, and now it is required to split the expenditure between direct and support costs. Next, we've got the apprenticeship levy. So this was new last year, and the Accounts Direction specifically wanted it shown separately within the staff costs note. This year they have decided they want it shown within social security costs, so it doesn't need to be shown separately. And additionally, if any apprenticeship levy funded training has been received, this should be recognised as notional income and notional expenditure in the SOFA. That's it for that. So tangible fixed assets, again, this is a minor point and it won't apply to everybody. The fixed asset note has just been amended this year to show an additional column for assets under construction, and it's just to bring the financial statements in line with the annual accounts return. And then funds. So the funds note, which you can see on, so it's note 19 of the Coketown model, page 54, now must have a full prior year comparative table, rather than just showing the opening balances in the current year table. It has to replicate last year's table, and it must also have an additional note, which is a combined table, so it will show the total position over the 2 years. So for this year's accounts, it will start at the 1st of September 2016. It will show total income, total expenditure, gains, losses, transfers, all for the 2-year period, and then have a closing position at the 31st of August 2018. So next one, related party transactions then. So this year's Accounts Direction, it wants more clarification on the transaction note, it wants things to be split out more clearly, so income and expenditure transactions must be clearly separated. And for any goods or services over £2,500, must now include a statement in the accounts that the element above £2,500 has been provided at no more than cost. And as part of this, a statement of assurance must be obtained from the related party to the Academy Trust to confirm that this is the case. And the statement about no more than cost shouldn't be included in the accounts if it can't be substantiated. So there's been the next point, transfers on existing academies. So again, it's not a significant change as such. There's just a little bit more clarity in the accounts direction on how to show this in the notes of the financial statements. So again, that one won't apply to every academy trust. Teaching school trading accounts, this is a new note that will need to come in. Again, it won't apply to everyone, only those with the teaching school income and expenditure. And it does require an additional note to the accounts. Last year we just had to show it on the face of the statement of financial position as a separate line as income and expenditure. And now we must also have a note which details out the income and expenditure between the different categories. An example of this is shown on page 65, just so you can see what sort of detail is required. And then the final point here is consolidated accounts. So this is a significant change, and it will affect, again, not everyone, but anyone with a trading subsidiary. The transactions between the parent and a subsidiary, associate or a joint venture must be disclosed. So previously we were able to use an exemption available under FRS 102. However, it's been made clear in the accounts direction that that cannot be used now, and all intergroup transactions are required to be disclosed. I think that's everything. So just a summary then. The trustees report, so just the sooner that can be put together, the better. It helps us prepare the financial statements in a more timely basis, and it also, if just one person has ownership of this, it makes it much easier to read rather than different people doing different sections. It can not always read very well, so that would just be one bit of advice that we would have for that. Just a reminder here for any multi-academy trust, there are additional disclosures that need to go in the accounts. So there's the analysis of costs of each academy, the fund balances for each academy, and central services as well. So that there's nothing new on those, but just a reminder that there are those additional disclosures. Related parties, so again, just a reminder to have all the up-to-date declarations, and obviously there are the changes with the disclosure notes that are required this year. And then finally, agency arrangements. Again, this won't apply to everyone, but it is a disclosure that sometimes can be sort of missed or left until the last minute. So for example, the 16 to 19 bursaries, that does fall under this agency arrangements, and details of that do need to be disclosed, such as the amounts received, how much has been dispersed, any amounts in creditors at the year end, so it's just something to bear in mind. That's it for the accounts direction.
Thank you very much, Lauren. So just moving on to other topical financial matters. National funding formula. I think we've done this to death in previous webinars. I don't think there's anything really to add over and above that. There are now illustrations and indications online of what your share of the national funding formula will be, and I would invite you all to look at that. We won't really see the impact until after 2020, when local authorities lose their ability to top slice. But it's there, and I don't think it's going to go away. The only other messages I would have is there will be winners and losers. If you believe you are one of the winners, please do, or even if you are one of the losers, please do budget in a pragmatic way and don't overestimate the plus side of any funding formula. And then lastly on that, letter from Lord Agnew. There was a letter that was sent to all auditors registered with the ESFA on the 15th of June. So it's, as I say, it's written in such a way that it's put together for the auditors, but it does encourage us to share it with our clients, to use the words that Lord Agnew uses to generate a debate with your clients. So if I pick up on some of the more significant points, there's a reminder from Lord Agnew of the ability to pool your GAG funding within a MAT, and that you are a single financial entity, and there may be times when the GAG funding will be used in favour of one of the schools over another, and just a reminder of that. Also a reminder of 3-year forecasting, which was made mandatory within the financial handbook. And again, similar to a point I've just made, is Lord Agnew has stressed to avoid optimistic approach to pupil number projections as a balancing item where funding pressures appear. So I think again what we're talking about there is perhaps being over-optimistic within our budgeting will not serve you or help you in the long run. Finally, I'd like to pick up on KPIs and benchmarking, and we've already picked up on that today, but it was mentioned within this letter. There is also an ESFA benchmarking tool which is useful, and we've also got our Creston version, which I think, again, if you haven't used in the past, I think it would be very, very useful. If anyone hasn't seen this letter, we can make it available to you, and please do request it. Just we're coming to an end of our webinar now. Deadlines, I'm sure you're all well aware, but the deadlines are there on your screen, fast approaching, and as Lauren mentioned, planning well in advance, having your trustees report drafted and so on, will stand you in good stead as we come closer to those dates. So, you've got our contact details there. Please do ask any questions. If anything wasn't clear or you would like some more information, you know where we are. There are some useful links there as well. I mentioned earlier the top 10 planning checks for governors. That includes some of the KPIs that we've mentioned, which the ESFA are focusing on, and I think as an academy you would be well served to focus on them. We've now got a couple of minutes, only a couple of minutes though, to answer any questions. We have had a question come in, which hopefully Lauren will be able to answer. The question is, with regards to gifts, what is seen as a reasonable amount? Lauren, would you mind dealing with that?
Yeah, so this is a question that I have had quite a few times recently. In the financial handbook, there is a section specifically on gifts, and it says the trust must ensure the value is reasonable within its scheme of delegation of financial powers, and importantly that the decision is documented, and that there's been due regard for propriety and regularity in the use of public funds. One change that has come into the accounts direction that I didn't touch on before, it's only a very minor change, but actually it could have quite a big impact, is there's a section specifically referring to alcohol, and it does, it's never been something that's been made very clear, but it's now been made very clear that excessive gifts, including the purchase of alcohol, is now considered improper use of school funds, and so it should be considered carefully before any school funds are used for that. Going back, just the gifts just need to be, the value needs to be considered, and to ensure that there's no misuse of the school funds.
Thank you, Lauren, and sorry we don't have better news on the alcohol front. I think we are drawing to a close now. As I've mentioned, thank you very much for joining us today. You will be sent a copy of our slides, and as I've mentioned, please do get in contact with either Lauren or I, or speak to your relevant manager or partner that you usually deal with within James Cooper Creston. That's it from us. Thank you very much.